Hey guys, it's Angelo Christian here with another great edition of Real Estate Insider, and today I have a great guest in the studio, Mr. Stan Abiassi. What's up, brother?
Hey,
man.
How are you?
Good to see you, man.
Good.
Awesome. Thank you so much. Today, guys, we're going to be talking about investors, commercial investing, business loans. I get a ton of our clients and investors. They invest in real estate, multi-unit family, and they don't have a great lender, a great conduit to help with leveraging their investments. We have a lot of our customers that want to buy $15 to $20 million apartment complexes. They want to buy a business, and they don't really know where to go. They may have spotty credit or having issues documenting their income, or there might be some type of issue. We actually cater to that type of clientele. We have awesome loan programs that Stan's going to be talking about today. If you're somebody out there that's looking to do investment acquisitions, whether it's in multi-unit, whether it's a 20 unit, a 50 unit, a 100 unit, you want to buy a $10 million business, you want to buy a franchise, you need an SBA loan, we have that market. That's what we specialize in. We have crazy, irresistible product offering down to 500 credit score, people that just started a business, limited documentation, less money down. Like if your bank wants 30% down on an apartment complex, we can get it done for less money down. We have access to better interest rates. So we're going to be talking about all this today. One of my biggest goals for my personal wealth and my holdings that I hold is apartment complexes. I love multi-unit. You've heard of Grant Cardone, Cole Hatter, some of the guys that I follow. They're really big into apartment complex, and so we want to become their preferred lender. And if you're out there and you're a business owner, you're an entrepreneur, I want that passive income, right? So that's my goal, is to accumulate 5,000 apartment doors and create an 8 figures of passive income with apartments. I love apartments. I think it's a great. Remember Monopoly? I was the king of Monopoly.
Yeah, for
sure. And so if you're out there and you want to try, either whether you're new and you want to buy one apartment or one house, and you want to do investor purchases or acquisitions on single family or multi-unit, we have great investor products and flip loans that we can help you, whether it's hard money and you need after repair value and you're trying to buy something, you need money for repairs, we can help you with that. Or if you want to buy multi-unit, like that's what I'm looking for. I'm in the market for, anywhere from 50 to 200 units, something like this, that's in the $15 to $20 million market. So if that's something that you're looking at, Stan's going to be teaching us. Stan is the guru with commercial. We're going to be learning from you today on some of the products that we offer, how to underwrite, some of the benefits, some of the guidelines. So I'm going to let you take it from here and kind of tell us, what's the opportunity? What can we offer out there to the people that other places can't do?
Hi guys, so I think we can start with apartments.
Okay.
So we'll talk about
that's
apartments
my favorite.
because it's hot.
Yeah.
Right? There's a lot of investors because you got a lot of doors and they're really good cash flowing investments. So before we get into financing, because there's a lot of private money, a lot of commercial lenders that have a lot of money for these types of things. Mm-hmm. Before we get into how to finance these things, what the rates are, and all that other stuff, first thing you got to do is pick the right property. Okay. Because commercial lending is not just about the borrower; it's actually more about the property.
That's right.
Okay. And because when the underwriter of one of these banks or one of these funds look to give you the money to buy the apartment complex, they look at what the cash flow of the property is.
Right.
If it's an acquisition of an existing property. Okay?
Right.
And there's occupancy percentages that you have to be within in order to get a loan. Okay. Even if it's in a great area, but if it's not 80, 85, some of them want 90% occupied, you're not going to get a loan on that because they have thresholds and mandates that they got to meet in order to lend on an apartment complex like that. And one of those is occupancy rates.
When I did some of my deals that I have, I obviously look at cap rate, and then the NOI is really big that I look at, and my underwriter, the bank that I went to, before I found out about some of the stuff that we do. But those are also very important things.
For sure.
Yeah. So now on occupancy, is there a threshold or is there a certain ideal?
So it did depend. Like this isn't, like residential mortgage, you have guidelines that you need to meet, but commercial is all done, internal guidelines. So it depends on who you're dealing with and what lender we go with. But a good range to think about from an occupancy standpoint is 80 to 90%.
Okay.
Some of them will go down to 80%. It depends on, what the expense to gross margin is. Of the leases. If you have high rents and the expenses are low, then they may take a less occupancy because the property is cash flowing, right? But if you're in a competitive rental market, and you have to stay competitive and you can't raise your rents that much to keep people there, then they may want a 90% more occupancy.
Okay.
Because it's a little bit more risk for
Right.
them. So that's the first thing to look at when you're buying an existing apartment complex is how many units are there, and is it 80 to 90% occupied?
Right.
Okay,
Right,
that's one
gotcha.
of the guidelines.
I
Okay.
gotcha.
The other one is this little unknown thing that really nobody knows about, and it's called debt service coverage ratio.
Okay.
You never heard of it? It's like a DTI when you buy your house. But you banks, that do apartment complexes, for example, that's one of the triggers that you have to meet in order to fund a loan.
Mm-hmm.
Okay. So, most banks, like I'm looking at one now, on some programs they'll go down to a 1.15 DSCR,
Okay.
to a 1.25 DSCR.
Okay. What?
So coverage.
Yeah, what
Okay.
does that
So
mean?
for example, take $1 million. So let's say you buy an apartment complex,
Okay.
and the P&I or the interest rate or the interest only, if it's an interest only loan, is $1 million a year. That's
Okay.
what it costs you, debt service wise.
Okay.
Makes sense?
Okay.
Then they look at the net profit. So you take the net profit and you divide it by the debt, that you're going to have to incur over the year, and that's how you come up with that ratio.
Okay.
That's a coverage. So what the lender's looking for, some of them want 2 times coverage. So if you have $1 million in debt, the thing better be doing $2 million in net in order to get two times coverage. Does that make sense?
Yeah, it does. But that means that they would want a low LTV then.
Yeah, absolutely. Okay. So LTVs, like some of them will go up to 70, 80%.
Yeah.
Okay.
Yeah.
75, but a lot of them want 60, 65% leverage, right? So you're correct but on some of these programs I'm looking at here,
Yeah, more aggressive.
one-time coverage,
Yeah.
you can go up to 75, 80%.
Yeah.
The ones that want 2-time coverage are like some of the depository lenders,
Right, right.
that like a Wells Fargo or a Chase,
Sure.
they're going to want 50% or 65% leverage,
yeah.
because their debt service coverage is 2 times.
Right,
So
right.
that's a parameter you got to meet.
Yeah.
So when you're picking properties, these are the things that you need to get, and you got to ask the guy, hey, do you have rent rolls? Okay, do you know what a rent roll is? Okay, what's the rent roll? And it's got to be a real rent roll. It can't be a piece of paper that says this, unit A rents this. It's got to be the name of the leasee.
Yeah.
It's got to be, the date they signed the lease, how long the lease term is, if they put a deposit down or they didn't, and they have to have what the rent is. And they have to, most of this is done on an Excel sheet, and it shows the gross rental amount. Right? That's just to submit the loan. When you get into underwriting, they're going to want copies of all those leases.
Sure.
And a lot of them, because there's a lot of iffy stuff going on in this market, a lot of them are going to want to see the bank statements associated with those leases to see that the deposits from the rent roll and the leases went into the account, okay?
Okay.
And not into somebody's, they've got to track all of this
Yeah,
stuff,
yeah.
okay? So these are things, and you've got to get that from the current owner. You got to get maintenance records from the current owner, okay? Because to calculate debt service coverage, we need to know what the expenses to maintain that property is.
Yeah.
Like if
Yeah.
hot water heaters goes out or you have bad
Right.
plumbing, the landlord's responsible for fixing that. That
Right.
comes off of the the net NOI, right?
Right.
Or the NOI, all right? So you have a net. You got to get maintenance records because the underwriter is going to require that in order to figure out what the true NOI is.
Right.
Make sense?
And now, is there a certain talking on cap rates, and I look for a certain number, and I don't know if is there a certain.
So it all depends. Like you have 2 types of investors. You have mailbox money investors that'll buy some suspect properties or high cash flow properties that won't appreciate, and there are lenders that love those because they like the cash flows. As long as and that was the other thing I was going to talk about.
Okay.
Was as long as the property isn't destroyed, because the other thing that people don't get is. I've gone into these loans, when I first started doing this, thinking, I could close every apartment complex. And then the appraisal comes back and the roof's leaking, or you have the foundations cracked, or the plumbing's rotted underneath the apartment complex, and they kill the deal right there. So you got to make sure you get an inspection on it while you find the right location. As far as cap rates, it all depends on what your portfolio goals are. I always tell investors that I've worked with, get a healthy balance of both. So, we live in Houston. There's a good area called the Heights, okay? Expensive land, cheap houses. You can get a house in the Heights that was built in like 1925, 1930, 2-bedroom. If something breaks in it, it's really cheap to fix, right? If you're a single family, homeowner, right? But the land's real expensive. I think the cap rate in the Heights is like 7, 8, 9, 10% every year. That's appreciating that way. When you get out into the suburbs of Houston, you have a cheap land and an expensive home, right? So if something breaks on the home, it's expensive to fix. And so the return on those homes when you lease them out there, same thing's true in commercial. If you buy an apartment complex, they're probably going to be newer out in the suburbs, okay? The land's still going to be cheaper out there. The closer you get to a major metropolitan area, the more the cap rate is. So it all depends, right? If you're buying property for portfolio appreciation value, then you buy property with expensive land and good cash flow, okay? Because the land is what appreciates. Because eventually, if you own the property long enough, you could have the option to maybe tear it down or add on, or build something different. But that land still has that inherent value,
intrinsic value.
Yeah. Does that answer?
Yeah. Okay. So is there any with investing with apartment complexes? Is there any buyer beware? I mean, you said the occupancy rate at least 80%, debt service coverage ratio. The underwriters, we have some products that are more
condition of the property. Yeah,
the condition of the property. You're going to have to get inspection. Now, later we're going to have future segments on how to evaluate a contract before they go into escrow and they put up earnest money. Is there anything they should be wary of or be careful of? Because I don't want someone to lose
if you
money.
have a good commercial real estate agent, because there's a lot of commercial real estate agents out there, and they're different from residential. But if you have a good commercial real estate agent, which
we do,
we have them, right? They should be able to get you the documentation. A contract on a commercial real estate is a little different. There's a feasibility period. And then there's the escrow goes hard period, okay, which is your typical time to close, your evaluation time. The landlord or the owner of the property is supposed to give you 30 days of feasibility. I like to try to get 60, depending on how long, how much information you got to go through, okay? But that feasibility period, the landlord's supposed to provide all of the stuff that we're talking about.
Okay.
The rent rolls, the leases, the maintenance contracts, the inspection goes down in there before the escrow even goes hard, right? Before you have to show up the title and the escrow goes into, after the feasibility is over, you go into hard escrow, okay? So typically these commercial loans, depending on how big the apartment complex is, and if the owner has his paperwork together, okay, is a 60-day close. Okay. Because and you want the feasibility time. You don't want to rush these. Okay. Because you don't know what you're getting, so you need that time. And if during the feasibility time, because I've had this happen, the owners of the complex don't have their stuff together. They don't have their paperwork. They're kind of hem-hawing around, and it's like, well, and they don't, and it's the documentation isn't well. That's one buyer beware, right? The maintenance records haven't been kept up with. You send you pay for an inspection. He gets out there and he goes, look, I don't know. When you look at the market, is it declining or is it increasing, right? If you start to lose leases after you buy it, which happens because if you're going to buy a complex, you have to make sure that the tenants are happy because you're now the new landlord, and they can leave when their leases expire. Go figure. So you got to make sure you're in an area that you're buying where you can get at least back up real quickly. Okay, good property managers, good leasing agents. You can get those people if you're a busy person. I highly recommend that you do that. But these are things that you want to look at. When you put a contract on an apartment complex.
Okay. Now, as far as I guess how we're different and what we can do, like as far as helping our customers, what are some, like, let's say that the apartment complex needs repairs. Can we put my funds in escrow for renovation?
There are loans that allow you to buy the property as is, and then they can include rehab costs with it. Absolutely.
Okay, so I can close on something that needs renovation as is. That means I can buy it as is, and then I can put an escrow into the loan essentially to repair or renovate.
Yes.
Okay.
Right.
And obviously the appraisal matters on that.
Yeah. Appraisal always matters.
Okay.
Yeah.
Well, I mean, meaning that, let's say that it's $1 million apartment complex, and I want to do 500,000 renovations.
Mm-hmm.
It's got to appraise for above the 1.5 because
For sure.
yeah, so it can't appraise below.
Right. So the way that you do that is you base the loan on a as-built appraisal.
Yeah.
Right.
Yeah.
Just like you would a normal construction. So what you do is you get a contractor.
Right.
You tell them here's basically what I'm looking to do.
Mm-hmm.
I'm going to upgrade it, whatever you're going to want to do, put a new roof on it, whatever
Mm-hmm.
you're going to do to it,
Mm-hmm.
and he gives you a bid.
Mm-hmm.
And based upon that bid, when we submit for the appraisal, the appraiser looks at the work to be completed,
Mm-hmm.
looks at, obviously, the comparisons in the market.
Mm-hmm.
Apartment complexes are hard to do comparisons because no two properties are alike.
And the appraisal is a lot more expensive than residential.
They are. Appraisals can be $3,000-$4,000, for an appraisal.
Yep.
But I don't know about other states, but I know in Houston there's not a lot of commercial appraisals out there.
Mm-hmm.
They're kind of like there's a handful of really good ones.
Mm-hmm.
Okay, that won't jack you around. We'll get the appraisal done in a timely fashion.
Mm-hmm.
But they are expensive. But you want that bid with the contractor so that it's included in the appraisal, and he can include that in the value assessment.
Okay, well, let's say that we go to put an offer on one, and we get the inspection back, and it needs new roofs, it has broken furnaces, and can I escrow that, assuming I have the equity if it appraises?
Yeah.
Okay, so
and they just pay the contractor out of escrow.
Okay, that's great. So, guys, if you're out there and you're looking to buy an apartment complex, a lot of them, in my experience, do need repairs. You can finance that and roll that into the loan, provided that the house appraises or the apartment complex appraises, so you don't have to worry about that you can't close on the deal or that you have to pay out of pocket for the repairs. If it has the equity, you can roll those repairs into the loan. What about if they want to do improvements? Like, let's say they want to add a fence or they want to add pools. Can they roll that into the loan?
Sure.
Okay, so you see that's another thing going. Let's say that you look at this apartment complex. He's like, oh my God, it doesn't have a pool, and you want to put a pool. Then we have products that you could finance those type of things into the loan, provided that it appraises out. So that's a really cool thing too. So it doesn't matter if you're in California, New York, Florida, Texas. We got you covered, guys. If you're looking to get pre-approved and you want to get into investing, or you're a mogul and you have a lot of money you want to invest, give us a shot. We have aggressive products to help you guys with less money down, great interest rates. And we work day and night to help you guys out there to build your real estate portfolio. Like I said, one of our goals here with our company is to build passive income with apartment multi-unit family housing. So if you're like-minded and you want to build your portfolio, reach out to us. You can click on the link below to apply to get pre-approved. We'll give you a pre-approval letter and also connect you with a commercial broker. Or you can call Stan or myself. The numbers here online. You can reach us out here and we'll help you to get pre-approved. It's real simple. There's no application fee. There's no deposit. It just takes a few days to get you pre-approved. What other programs are really good that we do that you want to talk about?
Well, one of the things I will tell you is it's as important as the program is understanding what your goals are, as you mentioned, right? Because if your goal is to build a big, investment portfolio of commercial real estate like multifamily, you have to finance it right, which means you got to leave yourself a little bit of equity. Because to really grow a commercial portfolio, you want to make sure you can leverage that. And if you finance it right, and because a lot of people do two things, they'll go out and get private investors and they'll scoop up some equity, which I hate because you have to deal with those people for the rest of your life, or you can get financing for it. And if you finance it right, then you leave yourself enough room, then you can leverage that property to buy the next one. Same thing, leverage that property to buy the next one. And before you know it, in a year, I've had clients go from nothing to having $2-3 million in commercial assets by financing their goals the right way and buying the property the right way and giving themselves a little room so that they can grow and expand the portfolio. Right. So, and as far as programs, there are things, that you can go down to like 4.9%, 4.7% on some adjustable rates, fixed for 3, 4, 5, 10 years, on some of these rates that we're looking at with very low debt service coverage, up to 75, 80%, and credit scores, I think here on this program, credit scores, down to 650s, right? There's other ones, that go down to 500s, 620s, and you can get up to $2 million for.
Okay. But that's not for just apartment. We also do SBA.
Oh yeah, we do SBA loans. Yeah. So and this is just one example. There's SBA, 504s. There's SBA 704s. There's an unrestricted SBA 7A program. It says bankable terms for unbankable borrowers, right? And this is all, government-backed lending, SBA, Small Business Administration lending, and they've got loans from 250 to 500. Purchase, refinances, and business loans, working capital, expansion, equipment, inventory. You can do loans like that for this. And they're saying stuff like office, retail, mixed use, industrial, commercial, condos, manufacturing, warehouses, self-storage, automotive, funeral homes, bars, nightclubs, daycares, lands for businesses, all that stuff.
So all kinds of business loans. If you're trying to buy a bar, you're trying to buy a nightclub, you're trying to buy a retail center, or you want to construct from the ground up, or you want to build an apartment complex, we also do those type of construction loans too. So if you're you're a commercial investor and you want to expand your portfolio, whether or you want to buy a business, you want to buy a Smoothie King, or you want to buy a Taco Bell, we have franchise loans for you guys too. So it's not just for apartment units. So it depends on what you're looking to do and what your goals are, but definitely reach out to us. And how I say that we're different is that we've been doing this for 15 years, 20 years. We work every single day, day and night, to get you a great pre-approval that's solid so you can close with great terms. We're very flexible on the credit, and have great, like I said, great interest rates like you mentioned, and less money down programs. It's a nationwide opportunity, it doesn't matter if you're in South Dakota or in Dallas, we can help you guys to get you pre-approved. Give us a call. You can reach us on the number on the website right here. You can click on the link below to get signed up. And we're definitely looking forward to helping you guys build out your commercial real estate investing. Is there anything else that you want to add or any?
We can do loans all over the country. Commercial, we can do them everywhere. We can even do them internationally. In fact, there's some stuff that we have in the Caribbean right now, so we can do offshore.
Okay, so if you're in the or what about Puerto Rico?
Yeah,
Puerto Rico, I guess would be
absolutely.
Yeah.
Now, depending on what's going on there, obviously.
Yeah.
But yes, I mean, commercial, we can do them anywhere. So if you're all over the country and you see this, we can probably help you wherever you're at.
Okay. Well, guys, again, thank you so much for checking us out. This is another great edition of Real Estate Insider. Stan, thank you so much for coming on the show today. Guys, please click on the link below to get pre-approved, or call us at 832-431-6331. I want to get you pre-approved and help you with your real estate goals, to help you build wealth and passive income with investing in multi-unit. I think it's a great way to grow your portfolio and make extra money. One of the things you got to remember, what Warren Buffett said, that you need to have multiple flows of income. Okay, you just don't want to rely on your job. You want to have multiple flows of it. All the richest people I know, all the people I look up to, they have 5, 6, 7 streams of income. And multi-unit housing is one of the best ways on how to create passive income. You get checks every single mail in the month. If I don't want to go to work today, I don't have to. My check comes in the mail. And as you see, rents are rising, and people are always going to be renting. After I'm dead and gone, from the beginning of the time, people need a house to live in. I don't think that's going to change. It may change where we buy our groceries at in the future, or we buy a t-shirt, but people are going to have to live in an apartment, guys. Let's face it, or live somewhere. So apartments are going to be here. So Jeff Bezos isn't going to change that. Elon Musk, I don't think they're going to change it. Maybe, I don't know. But so it's a great investment. So if you're looking to broaden your horizons, expand your investments, reach out to us, apply. Or if you want to learn more, if you want a business loan, thank you so much for checking us out. Click on the link below. Share this information with your friends, your investors. We'd love to meet you or come and give you a presentation. If you're a banker, if you're an investor, or you run a fund, we'd love to come and meet with you and give this presentation to you. And if you have any comments, leave comments on below. Please follow us, guys, on YouTube, Instagram, and Facebook. We work very hard to produce great content for you and educate you. All this information will be online. You can come and access it. Thank you so much for checking us out. Take care and peace out. Bye-bye.